Good morning, everybody. How are you? So Alison asked you a few questions earlier, so I want to add one other silly question. How many of you rode a roller coaster this past summer? Wow, that's a surprisingly large number. So I did too. I took my 5-year-old to his first amusement park ride, and there we were on this roller coaster. And all of a sudden, you're upside down, you have this feeling of dizziness. And what it reminded me of was, well, maybe the last time I was in a roller coaster, which is probably like 20 years ago, but also that feeling of those weekends in September and October 2008. Do you remember those weekends? Like you would wake up, turn on the morning news, and all of a sudden another large financial company had gone out of business, was forced in a merger. And so, it's definitely been a volatile time for real estate markets. We went probably to the biggest boom and bust cycle that we've seen since the Great Depression. For 135 months in a row, house prices in America went up and up and up every month. Housing wealth in the United States tripled from $10 trillion to $30 trillion. Commercial property prices went way up. Everybody was borrowing. People were tapping into their home equity in order to buy that next television or that boat or that renovation, right? And then, all that lending that was taking place, it really only made sense under the assumption that property prices were going to continue to go up. But unfortunately, they didn't, right? And we kind of had, not only a major recession where something like $10 trillion of housing wealth was lost in a matter of a couple of years. Stock market wealth was wiped out. People lost their jobs. Something like 11 million Americans lost their jobs. And something like 5 million American households lost their home in a foreclosure. It was not just that. It was not just a really terrible recession. It was also a financial crisis, right? And I think real estate was at the root of that financial crisis. I think what had happened is real estate risk had spread through the financial system, often through these complex securitization structures, housed in special purpose vehicles, very opaque, pools of mortgages, sliced and diced. Some financial alchemy was applied. And somehow we were under the illusion that the risk had spread outside of the financial system. But unfortunately, I think that was wrong. What happened is banks were holding on to some of the most toxic parts of that real estate risk on their balance sheets. And when the property prices started to come down, all of a sudden, the financial sector was found to be swimming naked. Right? It was not just it was not just large commercial banks and investment banks that were holding on to that risk. It was also an entire shadow banking system. Think of companies like Freddie Mac and Fannie Mae. I like to think of them as the largest two hedge funds on the planet. Right? That's what they were. They were $700 billion portfolios each, full of toxic, toxic and not so toxic mortgage assets. Think of mortgage REITs. Mortgage REITs are publicly listed companies that essentially borrow short them and invest in mortgage-backed securities. Think of private mortgage insurance companies or other insurers like AIG. All of them held this real estate risk. Many of them collapsed, and all the others were severely debilitated by this crisis, right? Now, it didn't stop in the United States. A lot of that risk was also held globally, right? We live in a global financial system today. Some large German banks held on to a lot of that risk. They had to be bailed out by the government. Lots of those bailouts then prompted sovereign insolvency in Europe and the sovereign debt crisis, right? So that's kind of the environment we woke up in, basically, and we've been trying to recover from over the last 5 years. And when I think back of that period, I think back of that roller coaster feeling of those weekends when we were kind of coming to grips with what exactly had happened over those 5 years. Now, in the meantime, we're 5 years down the line. American households have been delevering, right? They've been paying off their debts, some of it by saving, some of it by essentially shedding their debts in foreclosure. And balance sheets are much healthier again today. Lending has picked up again. Commercial banks' balance sheets are restored, and they've started to give credit to real estate companies again. We've seen new construction. Think in New York City, the World Trade Center has gone up in those last 5 years. We're doing new development in Hudson Yards. Entire new neighborhoods in the city are being built. Securitization, of all things, is making a return. Commercial mortgage-backed security markets are on fire right now. Commercial collateralized loan obligation markets are doing really well. And who knows, maybe with a good Dodd-Frank Act in place and with some good rulemaking to follow, maybe residential mortgage-backed security, private label residential mortgage-backed securities will return as well in the next few years. Right? So it certainly looks like we've turned the corner. And this kind of reminded me of an article that the Economist magazine ran in March 2002. This was actually the article that inspired my PhD dissertation, which I was writing at the time. And you know, I work in the area of how housing and the macroeconomy and financial markets are kind of all connected with each other. And The Economist ran this article, The Houses That Saved the World. And this was the article that inspired my PhD dissertation. And you can make very much the same case today, you know, 11 years later, that again, it's the real estate markets that are pulling this economy and this financial sector out of a recovery, right? As real estate is back, you know, 2013. So I think here we are, here we meet in New York City, you know, at this kind of turning point, if you like. It's a turning point in the real estate markets. It's a turning point for the US economy. And at the same time, it's an opportunity to think about a career in real estate. You know, real estate is a cyclical industry, there's no doubt about it, but we are at the beginning of a new cycle. And I think that, you know, having learned those lessons that we have just learned from the past 5 years, we might be at the beginning of something beautiful, where it's not just going to be the next boom and bust, but in fact, we will have created a more stable housing market, a more stable housing financial and commercial financial, real estate financial system upon which we can build for the foreseeable future. Now, as Professor Whitelaw said, it's not just about, you know, your next job. It's about what is your career in this area going to look like. So it's important that we don't just think about this being an opportune time in the cycle. It's also important that we think about the long-term trends that we face in this real estate market. Okay, so I isolated 4 of those trends, which I think are all going to be drivers of real estate markets and real estate careers for a prolonged period of time. So let me just briefly talk you through those. So the first one, I think, is urbanization. As you may know, 50% of the world population lives in cities today. By 2050, it's going to be 70%. You know, that means an additional 3 billion people are going to live in cities over the next 35 years. You know, if I asked you, what are the largest cities in the world today? You know what the top 4 is? It's Shanghai, Istanbul, Karachi, and Mumbai. That's probably few of you would have guessed those 4, right? Of the largest 25 cities in the world, only 3 are kind of traditional, you know, Western cities. You know, it's or first world cities. Tokyo, number 14, New York, number 18, and London, number 19. Right? So where is the world population moving? Where is real estate development? Where is real estate financing taking place? It's taking place overwhelmingly in the cities in the developing world, right? That's where it's happening. Now, think about that. You know, there's hundreds of millions, billions of people who are being lifted out of poverty into cities, into the middle class. All of those people are going to need houses. They're going to need office space. They're going to need retail. They're going to need infrastructure. They're going to need to build all that stuff. They're going to need to finance all that stuff. They don't have, at this point, nor do I foresee that they will have in the near future, the know-how and the infrastructure and the financial plumbing, if you like, to do all that work. So they're going to need to rely on people like you, on large US companies that will go there to help them do real estate development, real estate financing, help them build the houses that they need. But it's not just going to be about exporting knowledge. It's going to be about having creative solutions that are adapted to the environment of those cities and those places of the world. It's going to require somebody who knows how to do business in those places. And that's the type of career that we at Stern would like to prepare you for. The second trend, I think, is globalization, right? So real estate, so that's kind of obvious to some extent, but it's not obvious for real estate. Because when you think real estate, you think location, 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 right? Real estate used to be a local business. It used to be a business that was ran by its local champions. The New York City market, even today, there's still some of these iconic real estate families that have been here for generations. But these things have changed. With the globalization of trade and of finance in the last 30 years, the real estate markets have become global. Real estate companies have become large and global. Real estate security markets have developed and have become global, right? So these companies, think about these large real estate companies now. What do? They develop real estate all over the world in different countries. They finance real estate construction projects with money that they get from one country to finance projects in a different country. They run large international portfolios of properties, right? Global real estate markets, again, there's a global marketplace for those securities out there now. Think about the flip side of this. There's now also a lot of, globalization also takes the following form. People come to New York City, they come to London from Latin America, from Russia, from Canada, for example, to buy properties in Manhattan, to buy properties in London, right? They think of this as a store of wealth or a store of value, maybe potentially even a good investment. Although I doubt that $95 million penthouse apartment with park views is going to be a great investment. But, again, these people are coming here. They're going to need professionals who, again, understand how to do business in a global environment. People who not only know all the real estate finance that you need to know in those large, complex organizations, those large international real estate firms, but, who also know, corporate strategy, corporate finance, who know corporate governance, who know, how to manage strategy, like how to manage these large, complex organizations. The third trend is consolidation. Okay, so it used to be the case in the real estate industry that companies would be specialized. Some companies would just do development. Some companies would just do property management. Some companies would just do portfolio type of investments in real estate. The modern real estate company does all of those things. It's vertically integrated. It's large, much larger than it used to be. Now, with size comes complexity. I mean, why are these companies larger now than they used to be? Well, because there's economies of scale of this size. These economies of scale come with complexity. For example, there's lots of regulation, there's lots of diligence that has to be done, due diligence has to be done, and that requires highly specialized knowledge. That requires people who can support that kind of due diligence and litigation and so forth with economic analysis. There's a small company doesn't have the space for that inside its operation to have an expert in that, right? But these large companies do. These large companies also arise because they're dealing with large institutional investors, with sovereign wealth funds, with hedge funds. So they require people who know something about hedge funds, about sovereign wealth funds. They need finance professionals who know the real estate business, but also know the finance business so that they can talk to one another. And the last trend, I think, is financialization. So it used to be the case that all the capital in real estate markets was private. It came from, on the equity side, from private equity. On the debt side, it came from bank loans. And that's fundamentally changed over the last 30 years, and it's continuing to change as we speak. Now we have very deep pools of capital in real estate equity markets and in real estate debt markets. Think about the mortgage-backed security market. Think about the REIT market. So REITs are real estate investment trusts that are publicly listed companies that invest in real estate, right? So now you and I can invest in a well-diversified portfolio of stocks that are owning and managing real estate. That can be an internationally diversified portfolio. It can be a portfolio diversified across property types. I mean, what that has done to the industry has brought a new level of transparency. It has brought a new source of capital that it was previously untappable, that now all funds this development. And I think it's a fundamental change. It's a change also that has spun new funds, mutual funds, hedge funds that invest in these type of real estate securities. So they're looking for people who know how to manage real estate securities, who can do real estate research. They often use the services of real estate investment banks. And so we have all these other jobs, again, that are jobs that not only require real estate, but also require those finance skills that we at Stern are known for. So those, I think, are kind of my 4 trends as I see them, and how they have shaped, kind of transformed the landscape of real estate, and how they're continuing to transform that landscape today. So what do we have to offer at Stern in the area of real estate to kind of think about those trends and to help prepare students for those trends? Well, we have a new real estate curriculum that's part of our MBA program, where we have essentially 7 courses, all in real estate, ranging from real estate development to real estate, to the legal and tax aspects of real estate, to the finance aspects of real estate, and the capital market aspects of real estate. For example, I'm preparing a course right now which will be taught for the first time in the spring semester, which is going to be called Real Estate Investment Strategies. And the idea of this course is to bring together kind of new ideas about investing in real estate securities, both debt and equity, real estate stocks and real estate bonds. And my plan is to bring in people from the industry every week and talk to us or talk to the students about what kind of trading strategies that they're developing on both of these sides. So it's going to be a very practical class. And in fact, those of you who raised their hand that they're working in the real estate industry, if your boss has a few $1 million to donate, then we can also start a fund investing in real estate investments. So we have a new curriculum. This curriculum basically accumulates in a real estate specialization that our students receive upon graduation if they take our classes. We also have a new Center for Real Estate Finance Research, which was founded 2 years ago. And the center essentially has about a dozen faculty working in research related to real estate at Stern. And its broader goal is to offer thought leadership to the real estate industry going forward. We also have a large network of alumni who work in the business, both in New York City and worldwide. And those alumni are great. They come back here. They speak to our students. We have a career mentorship program for our MBA real estate students. Last week, we had the CEO of Greystone, which is the #1 multifamily lender in the United States, talk to our students in an executive in residence program. We have biannual conferences that we organize for practitioners and students. We have our upcoming conference at Bloomberg on October 18th. If you'd like to come, send me an email, and I'll invite you. We also have a very active real estate club, which organizes additional speaker series, which participates in case competitions and so forth. So it's a very vibrant community, and student community. And the last thing we have at New York, which is not to be underestimated, is we have our locational advantage. New York City is one of the real estate capitals of the world. But it's not just New York City. And by the way, we take full advantage of this. We shamelessly take advantage of this. We have all these people right here at our doorstep that we bring into the classroom, that we bring to meet with our students, to mentor our students, and so forth. But maybe less obvious is that NYU is also the only global network university. We have now a full campus in Shanghai, which is, as I mentioned, the #1 real estate, or the #1 city in the world. We have a full campus in Abu Dhabi, which is another interesting real estate market. And we have a satellite campus in London. And so we can leverage those locations to the advantage of our real estate students. So that's it. That's it for me. I basically wanted to just kind of summarize that I think this is an interesting time to contemplate a real estate career, because not only are we at the beginning of the next cyclical upturn, which is great news and which is actually going to create a lot of jobs going forward, but there's also these kind of longer-term trends that I outlined that will propel forward this cyclical upturn and make it in what I think could be really a long and rewarding career. Studying real estate, being in New York City, at NYU, one of the best universities, and with one of the leading finance departments, I think is definitely a great value proposition for you to consider. Thank you very much.